Hello everyone, I'm Austin Gehring at Ag360 Grain Marketing. Here's today's Market IQ January 10 USDA report reaction. Today we're talking about how the current supply and demand situation relates to similar fundamental situations in the last 10 years. We'll take that knowledge and see if we can glean any insights of what trading ranges we might expect for corn, soybeans, and wheat. We'll start by looking at corn. The U.S. corn carryout to use percent or ratio is currently 10.2%. As a quick reminder, this means that there is 10.2% leftover supply after taking away the demand, as reported by the USDA. Historically, the U.S. corn carryout to use ratio has been between 7 and 22%. Today is at 10.2%. I need to point out the disclaimer at the bottom. As a reminder, with all these charts, past performance is not indicative of future results. The question then becomes, in the last 10 years, what corn prices have we seen when the U.S. ratio has been similar to 10.2%? This line chart shows just that. These are the report date prices over the last 10 years that have had a similar ratio. The blue line indicates today's price in relation. Let's simplify it slightly. In the top right, we can see the Market IQ's fundamental gauge for the U.S. This shows what percentage of prices on this chart are lower than today's price. 23% of report date prices were similar to U.S. ratios over the last 10 years have been lower. Let's take a look at the world corn ratio. That's 23.7% today. Historically, the world corn ratio has been between 14 and 29%. The interesting thing about going back 10 years is that in late 2018, there was a massive adjustment in China's corn carryout. Knowing that, today's corn world ratio is on the lighter side when compared to report days since 2018. In the background, I'm adjusting these numbers so that we compare the report days before 2018 with the report days after 2018. There are the report day prices over the last 10 years that have had a similar to a 24% ratio, with blue line marking today's price. In the top right, we can see Market IQ's fundamental gauge for the world. 50% of report day corn prices with similar ratios over the last 10 years have been lower. It's important to note that a lot of the comparable report days occurred during the height of the Russia-Ukraine conflict, which caused much higher prices. So take these report days with a grain of salt. Let's try to put all this together and get something actionable. This chart combines info from the previous two charts. Now shaded into the background are red, yellow, and blue colors. These colors indicate how frequency each price level happens on this chart, indicating hot or cold. Red happens the most frequently, yellow somewhat frequently, and blue only sometimes. You can now see what prices have been common with the current supply and demand picture and where we are today. Obviously, there's other factors to consider, but supply and demand are a big part of determining price. For corn, 450 to 475 has been the most common price range. 425 to 575 has also been traded a fair amount with the fundamental picture we've had today. Keep in mind that very few report days were similar before 2020, when COVID and Russia-Ukraine war affected prices after 2020. Let's move on to beans. The current U.S. bean carryout to use ratio is 8.7%. Historically, the U.S. soybean carryout to use ratio has been between 2.5 and 25%. The prices on this chart show where we've been when the U.S. ratio has been similar to 8.7%. Market IQ's fundamental gauge shows 52% of report date prices with similar U.S. ratios the last 10 years have been lower. Looking at the world soybean, ratio, that ratio is 31.7%. Historically, we've been between 20 and 33%. These are the report day soybean prices over the last 10 years that are similar to a 31.7 ratio for the world. Market IQ's fundamental gauge shows that 67% of report day prices with similar ratios over the last 10 years have been lower. Combining the charts look like this. For soybeans, 925 to 1025 have been the most common price range. You could also say 875 to 1075 has been the most common, depending on how wide of a net you want to cast. Other factors play a part as well, but it's worth noting. And now we get to wheat. Wheat was not affected nearly as much with today's USDA report. The current U.S. wheat carryout to use ratio is 39.9%. Historically, the carryout has been between 23 and 56%. This chart shows wheat prices we've seen when the U.S. ratio has been similar to 39.9%. The fundamental gauge for Market IQ shows 39% of report day prices with similar U.S. ratios of the last 10 years have been lower. The world wheat carryout to use ratio is at 32.3%. Historically, we've been between 26 and 43%. These are the report day prices that have been similar in the last 10 years. Market IQ's fundamental gauge shows 38% of report day prices have been lower over these last 10 years with a similar world carryout to use. Combining these charts look like this. Today's price actually falls in the lower end of the red shade. The most prices have been between $5.75 and $6. We did trade between $6 and $6.75 some years. So that's not impossible. Prices lower than $5.75 were also seen between 2015 and 2017. We've had a similar ratio during those days as well. This seems to have a wider range than corn and soybeans. Other factors like U.S. conditions, Black Sea conditions, and export competition may play an even more essential role for wheat. Feel free to use this info in your marketing plan, at least until the USDA potentially makes adjustments in the next month's report. Thanks for watching. If you would like more content like this, contact us to sign up for Market IQ. Market IQ has daily insights, market alerts, price targets, and much more. Call our office at 620-345-4602 or email us at general@ag360grainmarketing.com or austin@ag360grainmarketing.com. See you in the next one.